Morning everybody, welcome to the Fractal Effects live stream. Please make sure you read the disclosure. If you're following along with us today, make sure you're doing a demo account, as this is for educational purposes only. This is not financial advice and we are not financial advisors. Let's jump onto the charts. Today we had another high impact news driver, PPI. So we'll be watching NAS, but we'll be focusing on US oil on the left. And again, the reason we don't like to trade the indices or any asset that's connected to the US dollar during certain high impact news drivers is because the probability of our strategy drops. So even though you could find a trade setup, it's a low probability trade setup, which we would rather avoid. So unless it's 70% or higher, we don't bother with it. So we know that Thursday's footprint takes us right back into Tuesday's range, usually the weekly range, which is marked out by the aqua line. So we're sitting right in it. We're right at the top actually, rejecting off of it. So let's see if we get a bullish confirmation, or if we bounce off of this and get a bearish confirmation. We have a upside expansion model. We did take out London lows already. So the only real barrier in our way is the top of the weekly range, the aqua line. And keep in mind that's already painted out by the indicator. Still no confirmation. We're getting some reaction off of the weekly range. Here's New York's fair value gap down here. There's London's. We have the 20 EMA right in the middle. So if we get a retracement back into this zone, then we get the confirmation. Then we might use the top of the dealing range and the top of the weekly range, the aqua line, most likely as our propellant to head up. So we'd like to get that confirmation before that retracement, because sometimes that becomes a runaway freight train that's harder to catch. NAS has already given us that confirmation. See this choppy price action right here? That's obviously due to the news. So although we will not be trading NAS, we are going to be watching it. We had an upside expansion model, took out all the lows, including Asia lows. Now we're heading up. Oil's hitting London, fair value gap, and the 20 EMA. Let's see if it retraces deeper. Slowly getting some reaction off of London's fair value gap, off the 20 EMA. New York dropped all the way back into its fair value gap. Let's see if we get a rejection from here and a push up. Three minutes left, 3 minutes 36 seconds left in this candle. We push past London's fair value gap. Slowly getting close to New York's. Let's see if it taps that. And I want to see the candle bodies closing above the EMAs unless it wants to push down. Unless it's using the weekly range. Because remember on Thursday we're supposed to trace back into Tuesday's range, to the weekly range. For the most part, oil's actually stayed in it. So that's where the range was started. We never really left the range, so now we're at the top of the range. We could most likely trade to the bottom of the range. We're getting some reaction now. Again, this is US oil on the left, NAS on the right. NAS also giving us a reaction off of the New York fair value gap, off of the EMAs. 2 minutes 17 seconds left. But again, our probabilities are low today because of PPI news. That's the producer's price index. So we will most likely avoid any trade setups here, even if we see one. Yeah, stick to your rules. We're getting reaction off of London's fair value gap. 1 minute 45 seconds left. Remember, everybody's broker has different tickers that they trade when it comes to oil, for example. So make sure you're looking at the right chart, following along properly. Oil moves roughly in the same pattern across all those charts. It's just the price is different. Your entry and your exit has to match your chart. So price came back down just a little short of 61%, the golden zone, which is right in New York's fair value gap. So we could get a little bit of a deeper retracement. Just waiting and watching. Again, there are people that go long from here. But until we get confirmation, this thing could actually just cut right through, break to the bottom, head towards the bottom of the range. Since we're already at top range, we're just going to go for one standard deviation. It's right here. As bouncing off of the EMAs, off the New York fair value gap. We're above the 238. We're getting some movement now. Let's see if this next candle closes above the London fair value gap, or if it wants to dip down and touch New York's fair value gap. Now slowly moving back up. Oil heading back up. Let's see if we can't get confirmation before 11 o'clock Eastern Standard. That'll give us more than enough time to look for a trade setup. So most likely by October, we'll be moving our live streams to the back end of the dashboard, and maybe even going to 5 days a week. And then we'll be using YouTube for market analysis. So make sure you check us out, fractaleffects.com. Slowly heading back up now with oil. New York also. Just patiently waiting for our confirmation. As mentioned before, we have an upside expansion model. We've taken out the lows, but we've also bounced off the weekly range. So we're either going to jump over this and then use this to push up, or we could get a bearish confirmation and head down to the bottom of the range down here. That's why it's important, especially for beginners, to wait for confirmation. So we've hit 50% of the dealing range right there, that gray line. So this is a good place for it to be pushing off of, even though it didn't enter the golden zone or the New York Fair Value Gap. Still brought equilibrium to the range by hitting 50%. Now let's see if it can get over the weekly range, or if it wants to bounce off that again. New York, still hovering around the 20 EMA and the New York Fair Value Gap. Since we already have confirmation, this is technically on any other day where we would start looking for an entry. It's got all the telltale signs. We're bouncing off the New York Fair Value Gap. We're below the 50% of the dealing range. We also have the EMAs right under. But again, it could just cut right through today. Probabilities are lower. Close to confirmation. Let's see if we can't get it before 11 o'clock Eastern Standard. US oil is a good asset to be trading on these high impact news drivers, on these high impact news days. It remains mostly normal. Stays with normal price action. So London, we did have a false day on London. We got a bearish confirmation, and then we broke the range. Asia session. Let's take a look at that real quick. Asia session was clean. We got a bullish confirmation, retracement into the range, and an extension. And usually London session ahead of these big news drivers like CPI and PPI it will be just as erratic. It starts engineering new liquidity, which is then swept by the news itself. Close to confirmation. So we can't get it in the next 10 minutes. Now, since we've already had a retracement back to the EMAs, back to one of the fair value gaps of interest, we could get confirmation and then use the weekly range as our point to propel up. NAS still sitting right at the fair value gap. Well, close to a confirmation now. Eight minutes to 11. Remember, even without dropping in the Fibonacci, if you're just looking to see where the 50% point is of the dealing range, it's right there. It's already painted out by the indicator in gray. You can make these, in the settings, you can actually make these lines solid. We just have them as kind of dotted, just so I know where it is. Close to a confirmation, 1 minute 42 seconds left. NAS still sitting in that fair value gap. Getting some movement to the upside. Bouncing off the 20 EMA. .58 seconds left. Let's see if this confirmation sticks. If not, we'll most likely get it on the next candle, but we are getting rejection. Not only off the top of the dealing range, but off the weekly range. Since we had an early retracement, once we get this confirmation, we could push either go over and use the weekly range as support, or we could jump into this fair value gap. Should be a shallow retracement, but again, we've already had a deeper retracement. The range itself is not that big today. Currently, that's our fair value gap of interest, although it is painting one right now. This could become a breakaway gap if this one stays open. Again, we're looking at US oil on the left, NAS on the right. NAS slowly moving back up now. Confirmation stuck. Now let's see how deep it wants to retrace, if it wants to fill in this fair value gap or leave it open. I want to see at least this candle close just to see if this gap stays open. We are on the other side of the weekly range now. So again, we could use that as support and just head up. Got one standard deviation marked up there. Three minutes left in this candle. Two minutes, 22 seconds left. NAS still just gesticulating between the top of the dealing range and that fair value gap. Again, it could just cut through. It could bounce off of it. Either way, it's engineering new liquidity right now. And these are not small candles. So we have our confirmation, still just waiting. We got about 1 minute, 22 seconds left. I want to see if this gap stays open and how deep we retrace into it. At the same time, the 20 EMA is moving up. Currently, this is our fair value gap of interest, but as soon as this one closes, this will be our fair value gap of interest. 1 minute. Closing in on 11 o'clock now. Twenty-five seconds left. Just paint this fair value gap out. Remember, the indicator already kind of paints it out for you, but we like to extend it across just so we can follow it better with our eyes. And we know where the midpoint is. Now ideally we want to see this 20 EMA cross into this fair value gap. Hopefully we retrace deep enough where we tap the midpoint of it, top the weekly range, top the dealing range. If we can hit that 20 EMA, our probabilities increase. That'd be a good place to start looking for a buy. Again, this is crude oil on the left. Make sure you're looking at the right ticker. If you're following along, make sure you're doing a demo account. NAS, again, cutting deeper into that fair value gap. Let's see if we get rejection here, if it just cuts through and gives us a false day. Should be a good example of why we do not trade this on days with high news and high impact news drivers. We are getting rejection, but we are under the 20 and the 50 EMA, still above the 238. We're just leaving breakaway gaps now, so let's see if it retraces. I'm hoping that this gives the 20 EMA enough time to get up here. So one duck down, tap the 20. But again, this could be a day where it just keeps going and then give us an opportunity to jump in. So if we hit our target by 11:30 without a retracement, we will be concluding the session. Remember, day trading is not everyday trading. We want to make sure we see the setups. We want price to come where we need it to be. We're not trying to jump onto a moving train. That's how people get hurt. NAS, once again, bouncing off that fair value gap. Right back at the EMAs. Let's see if it wants to push up or push down. This is where the decision will be made. Oil, just leaving fair value gaps. Extremely bullish right now. Let's see if it just wants to keep driving. We'll pull back. Again, we are high probability traders. When you check out the dashboard on Fractal Effects, you'll see that there's a high probability that the market will retrace back into the dealing range itself. Over 70% chance. That's why we're waiting. We want to see it come back in. Hopefully the 20 meets it. And then aim for our target. NAS currently having a tough time getting over this fair value gap. It's tiny, but it's painted out. little crudely, but right there. Oil still driving. Still got about 25 minutes. We want to see if it retraces. NAS back at that fair value gap. Let's see if it gets over, if it wants to continue to reject and head down. So just engineering new liquidity between this fair value gap and this fair value gap. People are going short here. People are going long here. More longs, of course. Session was bullish. We got a green box above the EMAs, bouncing off this fair value gap. Let's see if it sticks. Oil just leaving fair value gaps. Meanwhile, the 20 EMA slowly moving into the fair value gap of interest. I'd like to still see it come back down, enter our range, and get some gesticulation here, rejection, and then we'll start looking for a possible entry. Till then, we're just patiently watching. As we said before, I'd rather watch paint dry than be nervously biting my nails. So until it comes into our range, we're not interested. Again, this thing could continue to just drive up and tap the TP, which is fine as well, but we can't feel bad about missing a runaway freight train. There's no entry, there's no entry. Nah, still having a tough time getting over that fair value gap. Could just use this as a rejection. Head down. Oil still driving hard. One minute left on this candle. Let's see if it continues to drive or if we get some kind of a reversal back into the range. 20 EMA, even closer now to our fair value gap of interest. We're well above the weekly range, which is another sign of bullishness. So that increases our probability. If we get rejection here, it will most likely continue up. Excuse me. 27 seconds. Let's see if NAS closes above this fair value gap and then uses it as support, or if it just closes, heads back down. Another fair value gap. This is still the biggest fair value gap. We are now 20 EMA, sorry, is now inside our gap of interest, heading towards the consequence encroachment, the midpoint. So now this becomes a high probability area once price retraces back into it. Depending on where we get reversal, that could also push us right into our golden zone, 61%. Make sure you're always adjusting your levels. NAS now slowly getting over that fair value gap. Now is now finally above that fair value gap. Let's see if we finally get a red candle on oil. See if it wants to push down. We're already at 11, almost at 11:15. 15 minutes to see if we see a trade setup. So today was a good example. A good and bad example, actually. A good example as far as our strategy working. We had a confirmation, retracement back into our key zone, 61%, most likely in that area as well. Fair value gaps. And you have your EMAs and an extension. Bad example, because this encourages people to trade these days. CPI and PPI, FOMC. Remember, you have to adopt the mindset that even though it went the way that it was supposed to, the probabilities were lower. Remember, we're high probability traders. That's the only thing that matters. 70% chance or higher of getting it right. Anything lower than that, and you're gambling. So this was good to watch and learn from, but still, you don't want to be trading days like this, especially if you're a beginner. Oil driving up even higher, leaving fair value gaps, no real retracement here. And then usually, as mentioned before, when we get these early retracements, then usually we get a quick shallow retracement, a tap, but we had zero tap of any range right now. It didn't bounce off the top of the dealing range or the top of the weekly range here in Aqua. We didn't even tap this fair value gap, just been leaving breakaway gaps all the way. So as soon as it hits this, we will be concluding the session unless we get a retracement back into the zone. Our 20 EMA is now right at the consequence encroachment of this fair value gap of interest. So if we got a retracement and it tapped this, we'd still be interested as long as we see all the telltale signs, rejection, and then it leaves, gives us a entry point. NAS back into the range, bouncing off that fair value gap once again. Remember, this is the quickest trading strategy that you will find as far as looking for a quick entry and being done. 1 hour. 1 hour of your time. And even less, actually. You have your alert set up. Technically, we wouldn't have got an alert until 10:50. For anybody who's got a busy schedule and they only want to start looking for a retracement after they get confirmation. So we'll slowly get in some rejection. Let's see if this candle sticks. That'd be our first red candle. Our 20 EMAs, exactly where we want it to be. A lot of breakaway gaps here though, so let's see if it just taps one of these and continues going up, or if we get that proper retracement. This is where the high probability trades are. Top of the dealing range, top of the weekly range, 20 EMA, fair value gap, consequence encroachment, 50% of the fib. Let's see if we get that retracement in the next 12 minutes. Otherwise, we will conclude the session. NAS back into the dealing range. Still bouncing off that fair value gap. Tap that 20 almost. Ten minutes. We do have our first red candle at least. Let's see if it just bounces off the first fair value gap and continues up. Remember, this is already 1 standard deviations. So it taps this, hits this. Doesn't mean it can't continue higher, just means this is not an area where we would want to buy. We'd be buying in premium. I want to buy a discount down here. 20 EMA, now pushing deeper into our fair value gap of interest. Got about 9 minutes left. Let's see if we get any real retracement. Otherwise, we will conclude the session. NAS still back in the dealing range again. Look at this erratic price action. This is why you want to stay out of the market on days like this, or at least stay out of the indices and or anything connected to US assets. Another green candle forming. We still got 3 minutes left in this candle. But again, if it keeps driving up or it hits this, then the juice has been squeezed. And 8 minutes probably isn't enough for us to actually retrace back into the range. NAS still at that fair value gap near the 20 EMA. A little bit of seek and destroy happening here. Just taking out highs. Took out the lows here, took out the highs. Now we're just gesticulating back and forth, took out the highs again. Let's see if it pushes down and actually takes out the lows, or if it continues up. This is why you avoid it on days like this. Oil still driving up. Remember, we've had actually no tap of any fair value gap. This hasn't even dropped here. So no entry so far. Seven minutes left in the stream. Looks like this thing wants to continue to drive. One minute, 25 seconds left. Ideally, we would have liked to see it retrace into this zone where we would have looked for an entry. Just wanted to see. Remember to make sure that your entries at least give you 1 to 3. Because if you're not getting that 1 to 3 risk to reward, it doesn't even matter. 2.6. Again, the range is not that big today. Our stop loss would have probably been a little higher, so yeah, that would have gave us a good entry. Depending on, again, where we would have got rejection, where the wicks ended, etc. I just wanted to map this out just to kind of give us a good idea if there was even enough room there for growth. So there would have been if it retraced back into our range, but depending on where the wicks are, let's say we use this fair value gap, if it retraced here and the 20 EMA had been up there, depending on where our wicks were, could have been enough. But 6 minutes left, still no real retracement, still no tap into any of these fair value gaps even. Extremely bullish. NAS well below that fair value gap again now. Let's see if it just wants to continue down. Five minutes left. Make sure to check us out on fractaleffects.com. Also, if you're a new watcher, make sure you hit that subscribe button. You can be entered into winning a 6-month free membership for Fractal Effects. Again, not a single fair value gap tapped, just breakaway gaps, runaway market. As soon as this green line is hit, we will be concluding the session. Now the 61% is deep, right into that fair value gap. There's a possibility we could get a late retracement, but if we're not in a trade by 11:30, then we're not interested. The probabilities decrease after that. Also, by the time this comes back into the range, it could be closer to noon. So right now this becomes more or less the fair value gap of interest since our EMA is now pushed up. Doesn't mean that it can't still come back down here and tap this. It just means that it could possibly turn around from here. But it's already hit our TP without actually tapping any fair value gap. It could just continue going from here, but we're sitting deep in premium now. Nobody buys high. Buy low, sell high. So we will be concluding the session there. Make sure you hit the subscribe button and turn on your notifications so you know when we're live. We're live currently Tuesday, Wednesdays, and Thursdays on YouTube. But going into October, we will be moving everything to the dashboard on the back end of fractaleffects.com. Please make sure you check us out, and we will